Okay, it's time now for the day's business news, and Stephen Carroll is here. Good morning, Stephen.
Hello, Eve.
Stephen, we're going to start with Greece's spending plans, which they've just laid out for next year.
Yeah, that's right. It's a package that includes cuts to pensions and an increase in taxes on hotel stays, among other measures. But the troika of international lenders say that projections for growth of almost 3% next year are too optimistic. The budget also doesn't cut as much from spending as the troika had wanted. This comes as Greece is trying to secure payment of the last instalment of its bailout funds from the European Union. The finance minister says that Greece will have a new relationship with the troika from next year as the end of the bailout looms.
The crucial issue from now on, the key to growth and the lowering of unemployment, is to continue the reform programme even after the end of the bailout. The new reform programme is not going to be forced upon us by our partners. On the contrary, we choose to implement it because it is the only road that will secure sustainable growth.
Now, the Greek budget is just one of the topics up for discussion as the eurozone's finance ministers gather in Brussels today. They'll also be looking at the spending plans of all 18 countries that use the euro. For more on this, let's go to Brussels and speak to our correspondent there, Maeve McMahon. Maeve, thanks for joining us. Let's start with Greece. Is this new budget we've just been hearing about going to win Athens praise from its eurozone colleagues?
Good morning, Stephen. Well, that very much remains to be seen, but the fact that the 2015 budget was voted in last night, despite the anti-austerity protests and the high tensions inside the Parliament, will be highly welcomed today in Brussels. And it does seem like the draft plans is the closest really they have got to a balanced budget for a long time. The budget foresees economic growth of 2.9% and an unemployment rate reduction of 22.6%. But despite this positive step from Greece, it doesn't look like they will get off that troika life support machine just yet. In fact, the Eurogroup today could be looking at enhancing surveillance on Greece and a possible extension to their current bailout. As you know, the bailout that they have at the moment will expire on the 31st of December, and they're still waiting on the last tranche of aid, some 1.8 billion euros. So there'll be a lot of pressure on the Greek government today to ask for maybe a 6-month extension before the Christmas vacation. One EU official said the other day it would be hard to see the EU cutting them loose at this point.
Right, plenty more up for discussion in that meeting as well. Anyone else likely to be feeling the heat over their budgetary plans?
Indeed. Well, France, Italy and Belgium. France because of its inability, of course, to get its budget deficit to within 3% of GDP, and Italy and Belgium because of their public debt levels that are well beyond the 60% of GDP limit. All those three countries, though, they have already written to the European Commission promising to do more to comply with the rules. Ahead of the Eurogroup today, a French official said he really wants to avoid controversy today about that French budget. He said the decision had been taken by the Commission to give both France and Italy until March to deliver on those pledges of new changes to both the labour markets and, of course, structural reforms, and there was no need to add oil to the fire. Quite simply, Stephen, France and Italy do not want to be lectured today by neither Germany nor the Netherlands. They don't want to see fuel put on the fire like it was a few weeks ago when German Commissioner Günther Oettinger wrote an op-ed in the FT questioning really France's willingness to act to reform the French economy.
Oh, I have to see how successful they are at that. Maeve McMahon in Brussels, thank you for joining us.
We're going to go to Japan next, I believe, Stephen, where it seems the economy is in worse shape than we'd previously thought.
Yeah, these are revised figures from Japan showing that GDP shrank by 1.9% at an annualised rate between July and September. That's worse than the initial estimates of 1.6%. This latest recession had been caused by an increase in sales tax that came into force back in April. The downturn prompted Prime Minister Shinzo Abe to call a snap election for next week, which is seen as a referendum on his economic policies.
So how did the market, Stephen, take that news?
Well, we had been seeing gains, in fact, on the Nikkei in Japan before those figures were announced. These managed to almost entirely wipe those out. The Nikkei closing just above the flat line at the end of trading. In Asia, the Shanghai Composite was the star performer. This as new figures on trade in China show that imports had dropped sharply, that leading to more speculation that there'll be a new round of stimulus from the Chinese government. Investors like that sort of stimulus, which is why the Shanghai Composite has reacted so positively. Here in Europe, trading has just got underway on the European markets. Here in France, we're looking at news from the central bank that it's confirmed its pretty dismal growth forecast for the country, showing growth of just 0.1% in the last 3 months of the year. All of the main European markets opening in the red, as you can see.
Okay, and finally, Starbucks is eyeing up new markets and new products, some of which might seem a little unusual.
This is the company, of course, brought us the caramel frappuccino, is now going to look at selling beer and wine in its stores around the world. These plans unveiled at an investors conference by the company last week. The idea is to help try and boost afternoon and evening trade in Starbucks, because at the moment people tend to go there in the morning for their caffeine hit. The company is seeking to double its revenue from food and drink to $4 billion by 2019, $1 billion of that to come from beer and wine.
Can you see yourself going to Starbucks for your beer, Stephen?
I can't at this point in time, but you never know. They revolutionised coffee, so I'm sure looking to that as well with other products too.
Maybe it's the Irish in us. We just long for that pub. Stephen Carroll there at the Business News. Thanks for that.